For the day, Vaibhav Sanghvi, co-CEO of Avendus Capital Alternate Strategies, is joining us now. Vaibhav, hi, good afternoon. Thanks for joining us. It's been, strong bull markets led by the financials, not just financials, in fact, the entire economy-facing stocks. Your thoughts on how to approach this market incrementally from here?
So I think you're right, Anuj. Today the financials are performing, but if you see over the last week or in fact months, cyclical stocks have been the flavor of the season, kind of, if I may kind of summarize. We've also seen that the quality names, which everybody was kind of pretty convinced about their performance, have been a shade underperformer in the last couple of months at least. So what we can probably say from here onwards is basically one, that there is some valuation gap or valuation kind of catch up, which is kind of happening between value and growth. Just on an anticipation that the economy is growing and globally the commodities are also performing, is leading to money moving into a lot many value trades or under own names as well. So it's going to be very tricky, but we do think that the markets should continue to remain buoyant.
Okay. Vaibhav, good afternoon. So, things change very quickly in the market, right? Till last week, everybody was upset about these rising yields and so many questions were being raised. Do you think that storm has indeed blown over? Are we back to tracking or hoping really for a pretty robust economic recovery and playing on that?
No, of course. I think, one of the important variables, which is your US 10-year bond yield, and when it kind of spiked up, you saw a spike up in volatility global as well. And we saw some amount of FPI flows kind of affecting in the very immediate short term. But having said that, it is also a reflection of growing economy and growth actually coming back, right, where corporates would start to perform, and you may see some good earnings recovery also kind of happening across the globe, not only in India, but across the globe, which makes me believe that even though we may not see a further PE re-rating on the higher side, but the earnings story would catch up steam, and probably you may see markets kind of following the earnings growth going forward. So it is not going to be, individual stock driven, rather than a top-down call, which we have seen till now. But yes, the bond yields did have a scare on the global markets, and that is something which will, you will find these scares coming in intermediate periods for a quick, sharp correction.
Okay. Power stocks have started to make a big move, Vaibhav. Do you buy this sector? It's done practically nothing for the last decade.
No, I think, see, Anuj, pharma sector, we have always believed that it is far more bottom-up driven sector. Last 9 months have been very positive for them, purely because of whatever has happened in terms of the pandemic and some amount of interest coming back there. But we do think that, once the FDA inspection kind of starts, you may see some amount of volatility coming back to this sector. So we do think that the good amount of move has already been happened, and from here onwards, it's going to be very selective.
Okay, so Vaibhav, tell us this. I mean, how are you looking to play the market from here on, given that stock prices have already risen a lot? Are you still looking for, value plays on the economy side? Would you look at cement companies perhaps? How would you look at playing it?
We are dividing our portfolio into two parts, which is your, kind of longer term structural kind of bets and tactical plays, which is the other part. With respect to the longer term structural kind of bets, we continue to be bullish on banking and finance. And in a scenario where economy is kind of going to grow with huge amount of emphasis on capex, we are bullish on industrials as well. At the same time, on a tactical side, we would continue to play commodities. And last time also, when I had come on your show, I did mention about PSU banks, which we turned after a long time in terms of being positive. So we continue to play PSUs, including PSU banks as well, as a tactical play onto the portfolio.
Okay, so, within the lender space, or let's say within the financial space, Vaibhav, what all is the preference? Because, I mean, for instance, if we look at today's market action, the momentum is so solid. A lot of the AMC stocks, the two listed ones, they're also going higher. So, what all are you looking at in financial services?
Well, I think, yeah, as you rightly mentioned, Sylvia, I think the banking financial sectors are pretty wide one, right? And when I talk about banking, it is private banks versus PSU banks, and in private banks as well, the larger cap versus the small, mid cap and small caps. Whereas if I talk about financials, there are various against a huge amount of segments. What we are focused on is basically from a structural standpoint, those guys who are kind of foolproof balance sheet and has a great ability to grow and capture market share is the ones we would be looking for. There, I think private banks do still stand some good play in the portfolio. But from a tactical perspective, when you are playing for a valuation catch-up game, is when we think that the PSU bank story can also be played again from a very, very tactical standpoint. So those are the segments we are concentrating on. On the other financials, we are bullish on housing finance and insurance as well.
Okay, got that. Vaibhav, where does this leave the quality part of the market, which was the only thing that was in demand for the last so many years, right? So, for instance, some of the FMCG names, some of the top-notch MNCs. Do you think market's interest is going to kind of fade away a little bit from that part?
Unfortunately, even though they are fantastic and robust business models, the valuations which they are kind of quoting at may make them little underperformer in the short term. Now, this equation can completely change if you suddenly find that there's a global risk off and there is flight to safety again. But till then, I think we may see these kind of sectors, kind of defensive sectors, kind of underperform. Even though they will continue to give growth on their earnings, but people are here looking, or investors are looking for more exposure to names which can give you much bigger delta than the consistent kind of compounders, at least for the short term. So one has to be very, very tactical in choosing the sectors at the appropriate time.
Okay. So, Vaibhav, finally, what is, two-part question, what is the biggest risk right now? And what will be the next trigger? Because we've already run up in anticipation of, we've seen these upgrades for FY22, FY23. The market is already pricing in so much. So what will be the next trigger if the rally is to sustain? Or are we actually eventually going to enter into a consolidation band now?
I think the best situation would be that we enter into some amount of consolidation till the time we kind of see a consistent delivery of earnings from the corporates that we are tracking. So if they are able to deliver those kind of earnings, I think market would follow that. Having said that, if you ask me whether the P re-rating kind of happen from here, it is a little bit unlikely. But the two important factors, which is your interest rates and your liquidity from a global perspective, I think both remain very, very conducive. Anything which can affect either of these two variables is something which is going to be a big risk factor. If we again see some amount of taper tantrum, if we again see that Fed has not been able to communicate the rise in interest rates or withdrawal of quantitative easing programs, if it may happen in future, then again markets may kind of get a shock. And last but not the least, which is the biggest risk factor, is there is no apparent risk factor which we can see as such, which can immediately impact the market. And intuitively, it is one of, as we are the risk managers, we would see that as the risk factor, because that can create more complacency in the market, which is not very good.
Okay, take that caution on board. Vaibhav, good chatting with you today. Thank you very much for taking on the time and joining in. We look forward to the next one. Okay, on that note, we will take another quick break with the news that the market continues to be fairly steady. I mean, look at the Nifty now, 300 points on the Nifty. And the Bank Nifty, of course, is the big leader today. We'll take a break, come back and get you GS.